Hello guys, and welcome back to the video. So in this video, I want to talk to you about if Rocket Lab will ever need financing again. We are all afraid that Rocket Lab is going to start a new project and they will need to take in a lot of capital. Currently, the Fed's rate are supposed to be going down, maybe starting tomorrow. But currently the stock price is not as high as it could be. The financing opportunities are not as good as they could be. And, you know, many of these capital raises come with a massive dilution, which we want to avoid. And recently, as the stock price was rising, a lot of people on Rocket Lab Weekly were asking about this capped call transaction because it was saying, I don't know if you remember this table, that we are going to get diluted if the stock price goes up. So I thought that, you know, it's been 1 year or it's been quite some months since this has been announced. The stock price have been doing very, very well. And I wanted to look at, okay, is this, like, how much dilution is this really? And what can we expect for Rocket Lab in terms of future financing? And it's going to really surprise you because I made something wrong. And no, it's not the correct way of saying it. We all learned new data about Rocket Lab, which I think goes very unnoticed in the Rocket Lab finance community. So I want to share that with you. And again, the answer surprised you about Rocket Lab finances. It might be way stronger than we think. So it's going to be a very nerdy video, lots of numbers. I don't blame you if you don't watch this video. It's really for the total Rocket Lab nerds. Please make sure that you're subscribed. I want to give a shout out to the 20 people who support this channel via their channel membership. You guys are amazing. And if you feel you have gotten value out of this video, please consider supporting the channel. So first things first, I went through and read again, you know, when they announced this convertible senior notes offering. It's so complicated, this note, and they really didn't make it very easy for investors to understand this. So they did 355 million, I think, in the end, if we look at their last offering, yeah. And part of this, they bought call options on their own company. That's to lessen the dilution. And I was trying to do a lot of research on this, and I asked people if they are, you know, experts on this cap call transactions to please comment below, come on the channel and explain. It hasn't happened yet. I'm not sure that next time when I interview Adam Spice, I want to ask him because it's maybe not the most important thing, but maybe if there's a lot of comments on this, maybe we can ask him to explain what the heck happened to this deal. It's very, very hard to understand, but here are the things that I understand. Let me see if I can make this bigger. I think they also had this, here we go, here. So basically, if the time of the loan goes out, which is sometime in 2029, and the stock price is within these ranges, like between 8 to 513, and Rocket Lab is able to pay back this loan, then the only thing that happens is Rocket Lab pays back 355 million with 4.23% interest or 25% interest. It was a very good interest rate at the time. If the stock price is higher than, you know, this $8.4, like let's say the stock price is $9, then Rocket Lab is going to partially issue shares and partially pay back the notes. And in the worst case scenario, Rocket Lab is over $12 and 22.9 million shares are going to be issued. Now, what would trigger this is the stock price being 130% above the conversion price, which I believe is the $5.13. Again, they make it quite hard to understand. The conversion price could also be the 8.4, but doesn't make sense to me. It's probably the 5.13. Yeah, but that also doesn't make sense because 130% is like $12. So maybe what they mean is the 4.2, which was the stock price on the day when they announced it. You see, I'm telling you, they are not making this easy on us. And here's another additional kicker that I only understand now. They have a little bit of a footnote here, net shares issued upon conversion, like number one, and assumes upon conversion that Rocket Lab will settle the principal amount of the notes in cash. So in this version, if the stock price goes to $12, Rocket Lab is going to pay back the 355 million. And in addition to that, we are going to be diluted 22.9 million shares, which, again, if we, probably the way we need to, okay, I'm just going to show you something. So if the stock is $12, then we are paying as shareholders 274 million in addition to paying back the 355 million. And that's a damn good business loan that Rocket Lab was given. But I think probably the way we have to look at it is the stock price at which when this whole offering was announced. And that is this 4.02. So 22 million times 4.02. That would be a 92 million loss for us, which, you know, I never like to see as an investor. But what would you rather have? You know, the stock price being at $8 and no conversion happening, or the stock price being at $15 or $20 in 2028 and a little bit of conversion happening. So, and how big of a hit is this to us as shareholders? So now I had to redo my Rocket Lab table, which is, this is the table that you get access to and you can play with if you support the channel. And let me just make it big, and here we go. Here we go. Now it's back to normal. Let me make my face disappear so you can see it, and let me, so just quickly want to show you this table. I am tracking, you know, the launch services, space systems, their estimated revenues. I haven't updated, like I didn't take away the letter E. I'm pretty sure that these numbers are updated. It's tracking the year-over-year growth, the quarter-over-quarter growth. It's tracking the GAAP and non-GAAP margins. And then it's tracking the adjusted EBITDA, which is basically a metric that does not count with stock-based compensation and I think a few other things. And you can see that the adjusted EBITDA is basically trending up to 0. You can see that total revenue is trending up, very nice. And you can see that the adjusted EBITDA margin is very nicely going, like the minute it crosses 0, it means that Rocket Lab is generating cash. Maybe we are still losing money on the GAAP basis, which is the generally accepted accounting principles. But that would be, you know, a matter of time until we are also GAAP profitable. Now, I wrote here I went through all the 10Qs and the annual reports of the company. And I wrote up what was the share count at the end of every quarter, because I wanted to get a sense of like how much is normally Rocket Lab diluting us. And let me show this in a much bigger way. And you can see in my valuation model, I was thinking with 3% dilution. And this is the actual dilution that they do quarter. So this is always like year-on-year change. So it's not that they diluted us 2% each quarter. It's like compared to last year. So you can see we're at 2.7, 3.2, 3.05, 1.72. So me calculating at 3%, I feel is exactly correct. And you can see that we're probably going to be over 500 million shares by the end of next quarter. And 22 million out of the 500 million is a cool, let me give you the number, 22 divided by 500 is a cool 4.4% dilution. So even if that happens, I feel in the grand scheme of things that's not a big hit to us shareholders. And I much rather have a stock price of 18 and lose. I mean, for the 4.4% is a red candle, right? So it's like if the stock goes to $15 and then you get a red candle down to $14, that's choice number one. Or choice number two is that the stock stays between $8 and $5 in 2028, and then we get no dilution. Like, I think we all know which one is the better answer. But here's the thing that I realized while I was doing this research, that Rocket Lab has given us new data about how they collect cash for their launch services. Because, you know, Wall Street was making a big deal about launches being moved around, and Rocket Lab basically said that no, but this is part of our offering, and we basically get 90% of the money paid up front. And if the customer has to change the launch date, it doesn't really matter for the company because they have already collected 90% of the money. And you can see that at contract signing, they get 10% of the money. And then, you know, 9 months before launch, 20%, 6 months before the launch, 30%. And yeah, basically they really get 90% of the money upfront for the launch. And then I was like, this is very interesting, because when you look at the P&L of the company, obviously they can't recognize the launch revenue. But if you look at their cash flow statement, it must say there that the operations of the company is bringing in this money. And I found something very interesting. I was going through a lot of 10Ks, 10Qs and 10Ks. So, for example, here's what I mean. You can see that we lost $85 million on the P&L in 2024 in the first 6 months. And let me just show you, because I was looking at the cash flow statement. So we go to the P&L. Here's, the current quarter and the 6 months. And you can see that the loss is $86 million. But we know that their cash didn't go down $86 million. Their cash actually went up. And, you know, the changes to the cash you can study on the cash flow statements. And I was looking at this and I'm like, okay, we lost $85 million. And right away you see that they add back the depreciation, amortization, and the stock-based compensation for the employees, which is a cool, it's very late. So what is it? $43 million out of the 85 just is not even a real loss, right? And then I was looking through the numbers and I'm like, okay, so we have this contract liability section, $44 million. Because in the bookkeeping, I warned you that this was going to be nerdy. So in the bookkeeping, when the customer pays you money, but you can't recognize that revenue on your P&L, you actually owe that money to the customer. So it becomes like a liability, but you did get in that money and you're going to deliver that service. And then when you deliver that service, then it's like you fulfilled the liability and then it disappears from here and it goes on to your P&L. So they actually received 44 freaking million of upfront payments from customers. And when you add everything together, the operation, like the Rocket Lab operation, was actually only losing 15 million in the 6 months. And that is a very, very small number. And you can see that the number compared to last year's 6 months is cut in half. Okay? And this really got me interested, because if I look at my table, I completely nerded out, and this is the current quarter, and every quarter I calculated out how much is Rocket Lab operations bringing in or losing. And you can see that don't look at that number, that's not a correct number, but it's correct from here. So you can see that the losses, they are on a very, very nice downtrend. Q1, it was $2.5 million. So that means that Rocket Lab was almost operationally cash flow positive already in Q1. Okay, in Q2 we only lost $13 million, but we can see that this trend is going very much in our direction. And I realized, like, okay guys, this is happening despite us developing Neutron, and we know that Neutron is basically a money furnace. And I'm like, okay, so Neutron development in a few quarters is going off. We're not going to be spending money on that. And on top of it, what are we going to be doing? We're going to be selling Neutron contracts. And what happens the minute we sell Neutron contracts and the customers sign? That's right, we get the 10% of that. But that 10% is 10% of a 55 million launch. And what did Adam Spice and Peter Beck talk about on so many conference calls is that they are looking at block launch as opposed to Electron, which is, many single launches. With Neutron, they are trying to sell block contracts. So if they sell a 10 launch contract, let's say to Amazon, and they sign the contract, theoretically, they should be paid 55 million. Now, maybe there's a discount there or, like a different schedule on getting the money. But what if they get 25 million, right? And I think that Rocket Lab operationally is going to be very, very profitable very, very soon. So we will definitely not need to raise any money for Neutron and Neutron operations. And by the way, Dave G and Scotto and Matt, if you're watching this and you feel I made a mistake, just let me know in the comments, or we can talk about it on Rocket Lab Weekly. But I'm quite sure on this. So Neutron, we are Gucci. We don't need more money for Neutron. Space Systems, we already know that they are very smartly arranging the contracts to basically so that it doesn't affect the working capital of the company, meaning that they basically are able to invoice and get in what they're spending on the Space Systems. So the only real kicker that can happen for us is the acquisition that we know that they're trying to do. If they do a stupid acquisition and they spend all their money on a company that is, cash losing, which I really don't think so. So they would spend 300 million on a company that is losing 20 million a year. Then, our money is gone and we need to subsidize a new company for 20 million, 5 million per quarter. But it's not how I know Peter, right? And then the second thing that might make it so that Rocket Lab needs a capital raise is their space infrastructure. Because what if Adam Spice and Peter Beck, they come up with a constellation that is a communications constellation, and we need 1,000 satellites to blanket Earth before they can start operating the constellation and start billing customers. And if each satellite is only 10 million, but it's 1,000 satellites, they will need $1 billion. And we don't have $1 billion even on the map currently for Rocket Lab. So that would mean a dilution, and it would not be good for us as shareholders. But again, in the recent conferences, Adam Spice was talking about how that they might be able to go to somebody and just provide the constellation as a service, which means that they would get prepaid again on the constellation, which again would mean that they don't need to raise money, and the capital that we have at hand is more than enough, and there is not going to be future capital raise, which would be amazing for us as shareholders. Obviously this is half speculation, half reality. I don't know. Again, I'm very sure that the part about the rocket launch part of the business is not speculation. I mean, I showed you the numbers. It's math, right? The part that is a speculation is what is the acquisition that they're going to do and how deep in the pockets that is going to do. But again, I trust management. I feel that Adam Spice and Peter have their heads really screwed on right, and I don't think that they're going to do a stupid acquisition, and I'm not afraid of that. And on the constellation, I feel that Peter and Adam is going to go after an opportunity. And if that opportunity is going to require that we do a capital raise to capture a very big market and really get a move on other competitors, I'm going to be okay with that, okay? But because there has been so much talk about them just going to someone who needs a constellation and just providing them with a constellation, which would mean that they are prepaid or, you know, very much need they need to put very little investment into the constellation to get it up and running. I'm tending to think that we might just be good with money. And I was actually really surprised to find this, because I was very sure that Rocket Lab is going to rug pull us and announce a capital raise, you know, when the market opportunities are correct. And it still might happen. But we are starting to see signs that maybe we are good. And that's just quite amazing as a shareholder. So anyways, thank you so much for watching. It's been a long video. Let me know in the comments if this gave you value. Again, shout out to the 20 channel members that support the channel. You guys are really unbelievable help. And see you in the next video. Ciao, ciao.